Hey folks, Dan Frio here with your real estate update for December 22nd, 2023. So we're just days away from Christmas. And the first thing I want to tell everybody is happy holidays to y'all. We greatly appreciate the support of the channel you give us and the overwhelming support that you guys are calling and putting in applications. I can't thank you guys enough. So God bless you. Happy holidays to you. And without further ado, let's get over to it. So why are you here? Well, you're here basically to figure out what in the heck's going on with real estate, especially what I focus in on here is interest rates and mortgages. Why? I'm a mortgage advisor. I've been doing this for 33 years. I'd love to help you. I'll give you my information at the end of this video. If you're out there and you're like, hey, I'd like to try to figure out if I can buy a house in this market, or if you're locked in at a rate that's much higher than this, reach out to us. We'd love to help. So without further ado, let's get over to it. So, because we have some good news on the inflation front this morning that I want to give you, and that's about it. But I'm going to give you a little bit lengthier agenda on what was on the calendar for today. Well, let's get over to it. So first off, here's the top 6 products people use when they're buying their first house. What these aren't not my rates. These aren't any individual bank's rates. These are the national averages for somebody in this situation. So what happens is Mortgage News Daily, right at the top there, they survey lenders all over the country and they ask them these 5 questions. 5 questions are, if you had somebody with a 740 credit score and putting 20% down, that might be you, it might not be you, but if they're buying their first house, it's a primary home, it's going to be where they live, and it's a single family home. If those 5 criteria are yours, that's probably what your rate's going to be. If you were not putting as much down or your credit scores are lower, you probably have a little bit higher rate, but I'll help you find that out. So the first thing we want to look at is right here. The biggest thing that came in today is Fed's favorite inflation gauge shows prices rose. I don't know why that's coming up that way. Let's refresh the screen. We can go through here. Fed's favorite inflation gauge shows prices rose at 3.2% annually in November, less than expected. That was fantastic news. What I really want to do is do a deep dive into that to just show you the inflation numbers and where the economy is starting to crack. And I'll give you my insight on the stock market a little bit as well. I'm not a stock advisor. I'm not a financial planner. I'll just give you my take on it as a personal take, just so you guys understand where I'm at on all this. But I'm starting to see a lot of cracks in the foundation. And the stock market is just going every day. It's going up and up and up and up. That's somewhat good news, but a lot of these earnings reports, we know the economy's starting to slow down. Okay, so a lot of the earnings reports for these companies are okay, but are they enough to keep up the multiples that people are paying for the stock prices? That's all I'm really going to say about that. So if you have a stock portfolio, please reach out to your financial planner and have them take a review of all your stocks, maybe reallocate some things. But we want to take a deep dive right now is right here. So yesterday, late in the day, we saw the Fed's balance sheet come in, and it's shrinking. We know it's shrinking, and they're not buying mortgage-backed securities and things like that. They're actually selling off some things. But I just want you to show you the Fed's balance sheet is starting to shrink. But now here's today's news. So let me put my cheaters on because I'm an old fella, and let's go through this. We got building permits. Now this is concerning as well. The last number came out at 1.498 million units were being produced, or permits are out there. It's declining to 1.467. Folks, we need, and if you watch my channel on a daily basis, you know we need more houses. Okay, that's just the facts behind all that. So now we're starting to get into the areas that the Federal Reserve watches, and right through here we saw Fed's favorite inflation gauge shows declines. Here's where they are. Okay, core PCE right through here. PCE is what they're looking at. All right. The PCE year over year came in previously at 3.4. They thought it was going to drop a little bit to 3.3. It actually dropped to 3.2. Might not seem like a big amount, but it's a good trajectory on where we're going with that. So that's good numbers. Next one is core PCE month over month. Last reading was 0.1. They thought it would go up a little bit to 0.2, stayed right in line at 0.1. That means a lot of the numbers, or a lot of the inflation numbers are starting to come down. That's core. What they do is they strip out food and energy. So now, once we get to reality, you and I, we have to pay for food. We have to pay for gasoline. So what's the true PCE doing when we don't? The core means they stripped out, like I said, food and energy. What's the main PCE doing? This is what the Federal Reserve really monitors. Last reading was 2.9 year over year. It was expected to come in at 2.8. It came in at 2.6. We're finally in the 2 range. We've been there for a couple months, and that's great news. Here's the shocker. The PCE month over month was 0 previously. Now it's minus minus 0.1. So we're starting to see an inflation starting to come really down. Now here's the thing that was kind of why the markets aren't reacting as much as I think they should have, is because we see inflation coming down, but the problem is right here. Personal spending. People are still spending money. So we had spending was up 0.1, is expected to increase a little bit because of the holidays as well at 0.2, and it came in at 0.2. So that's where we're seeing right now. So basically what this is telling us is inflation is coming down dramatically, especially in the realm of what the Federal Reserve monitors. Okay, so that's one piece of this thing. The next thing is we want to discuss also in today's video, just briefly, is a lot of people keep telling you, foreclosures are going to run rampant and all this other stuff. So this data just came in today, and that's the reason why I'm publishing it today, is to show you guys that foreclosures aren't running rampant. People are like, oh, they're up 5,000% since last year or the year before. Guys, here's the true numbers, okay? So what I want to do on this channel is I got nothing to hide. I'm giving you guys the facts, the information, and where you can find all this data. Okay, so just check out the most recent foreclosure numbers. And why we follow this is we need more houses to come to the market, because that's the only thing that's going to drive down prices, is a huge increase in the number of homes on the market. Because we know people that currently have homes, they're not selling because they have a fantastic interest rate. So we need home builders to build more. And unfortunately, the part of this cycle is foreclosures are a part of the cycle. So unless you have foreclosures really ticking up, you're not going to see, decreases or even stability in home prices. You're going to see them keep going up and up and up. And to prove that, let's go back to here. Building permits. Building permits are going down. Okay, so the next thing we do, like I said, we go over here, November of 2023 versus November of 2022. Yep, foreclosures are up 0.3 or 0.39, 0.38, I guess. But from November of 2019, basically they're right in line there. In foreclosures, it was 0.47 or 0.441. So foreclosures are less than where they were pre-pandemic, okay? And then you can go down through here, number of properties and delinquencies and so forth. It's down since the 2019 numbers. 2022, 2021 are a little skewed because there was the foreclosure moratorium on. So, a lot of people, I'm just trying to explain this to you. A lot of people are saying foreclosures are going to go out the roof and that's going to crash the market. Here's the facts, folks. Here's the facts, and there's the numbers right there on building permits. So we need more homes to basically stabilize the markets, and that's what we're seeing for today. So we went over the inflation numbers, which came in great today. Spending was a little bit hotter than expected, and foreclosures are basically lower than expected and lower, a lower number than we've had in previously history pre-pandemic. So with this data out, what's going on in the markets? Well, we focus here on what's going on with mortgage rates. So to do that, what we do is we follow the mortgage-backed security bond. Okay, that's what you're seeing right here. This is the MBS. What this is a bond that trades on Wall Street. That's yield is the biggest component of your mortgage rate. Now, a lot of people say, watch the 10-year Treasury, and that used to be good news, or that used to be a good gauge to follow. There's a huge disconnect right now. So if you really want to truly find out what's going on with mortgage rates, follow my channel. I subscribe to MBS Live. This is a fantastic website. If you're out there and you're a mortgage advisor, you might want to look into this. If you're a realtor, a consumer, maybe you're an economics teacher and you want to watch this, just watch my channel for the first 5 minutes. I can guarantee that your students or your clients are going to find this information very useful. So what we're seeing right now is the MBS market right now. You got to squint over here, but we follow the price and the action going on. So all you need to know in this is, in its simplest terms, if the price is going up, rates are coming down. There's a flip-flop, an inverse relationship. Prices up, rates down. Prices down, rates up. Look at the chart. This is where we've been. We were down here, and then we went all the way up here. That's why you've seen mortgage rates go from 8%, where we were just about 2 months ago, right over in there, 8%. If you see those numbers, everything, you see the 666 where rates are right now. 52-week high and low. 52-week low was 599. 52-week high was just 2 months ago at 8%. So we're down almost 1.5% in the last 60 days. So what do you do if you're out there and you're locked in, or you're just trying to figure out, what can I do? Well, first thing, if you're locked in, in, please try to call your mortgage company or your mortgage broker or your bank and say, okay, I know I'm locked in, but my rate is much higher than where they are today. What can I do? If they say you can't do anything, please reach out to us, okay? We created a new loan estimate tab. All I want you to do is upload your loan estimate into there and give me what your credit score is, and I'll get back with you probably within an hour or two saying, okay, here's what you got. Here's what we can do for you. And the analysis we send you, it's basically a breakdown of the numbers. It's a website we created. It's fantastic. And we're going to come back to you and say, okay, the quote you got is fantastic. God bless you, take it. But most of the time we get back to you and say, okay, we can get you a lower rate and lower fees. So please, let us assist you with that. Why would you go back to that other company that maybe was trying to take advantage of you, or maybe, they're trying hard to get you done, but our goal here is to try to get you money as cheap as we can. Okay. So if you're out there though, and you're saying, okay, maybe can I buy a house in 2024? I don't know if don't think about it. Don't hesitate. Please don't disqualify yourself. Reach out to us. All we're going to do is set up a consultation with you to talk you through the numbers, talk you through everything else, and provide you that information to say, okay, here's the numbers. You decide if this is a good idea for you and your family. So how do you do that? One of three ways. One, you can hit the apply now button right up through there. It's going to ask you a series of questions. Based on those questions, I'm going to assign you to a specialist on our team that specializes in exactly what you're looking for. But if you're out there and you're like, hey, Dan, can I call or can I email you? I just got a question. Sure. You're at therateupdate.com. All you need to do is scroll down to the bottom after you get past the blogs and the financial calculators and everything else. And what you're going to see is our 800 number as well as my email address. There it is right there. So without further ado, that's all I have for today, guys. But all I want to say is God bless you. Have a fantastic holiday weekend. I'll be back on Tuesday bright and early to give you guys some input on what's going on with real estate. So that's it for today. Take care. Thanks so much for watching. If you find value in my channel, all I ask you to do is subscribe down below so you don't miss a video that I put out there. Take care. See you next week. Bye-bye.